Hi believers, this is Amit from Waya team, and I am here to provide a weekly bite and the road ahead in the markets. The domestic benchmark indices Nifty 50 and Bank Nifty concluded the week in negative territory. This is their fifth decline in 6 weeks. The Nifty ended 0.7% down, while the Bank Nifty was down by 0.2%. Broader markets too underperformed, with mid cap declining 2% and small cap declining 0.3% for the week. Our markets are experiencing losses primarily due to lackluster corporate earnings and ongoing foreign fund outflows. To put in perspective, in Q2 FY25 thus far, the revenues have grown at 8.7% YOY at an aggregate level considering 1,000 companies that reported numbers, whereas the earnings have actually declined by 2.7% YOY. Comparing it with high valuation of Indian markets, numbers are very poor and hence the broader correction is warranted. Jefferies, a global investment firm, has downgraded its earning forecast for 63% of the 121 companies it tracks in India, marking the highest rate of downgrades since early 2030. Most of these companies are large cap though. On a standalone basis, the FI sold off almost 1 lakh crore in October, which also looks like a big number in a span of just 1 month. The FI selling trend is likely to continue in the near term till data indicate the possibility of a trend reversal. If the Q3 results and leading indicators reflect recovery in the earnings, this scenario can change with FIs turning into buyers. Investors will have to wait and watch for that data. Meanwhile, in such an environment, investors can consider churning the stocks in portfolio, tilting it towards sector and stock specific, where growth momentum is still maintained. We don't think there's any need to panic as there's enough liquidity in India and the fundamentals are still quite strong for the long term. On a global front, key events of the week were Donald Trump win of US presidency and recent election. The US market jumped 4% during the week and recorded new highs as US election outcome boosted the market sentiments. Trump's recent victory speech emphasized his commitment to ending wars, which initially boosted the global market sentiments. However, ongoing geopolitical conflicts and aggressive strategy may negatively impact global growth and trade considering US trade conflict with China. Market movements will likely hinge on proposed tax cuts, larger fiscal deficit with Trump aiming to reduce corporate income tax from 21% to 15%. This could enhance business confidence and earnings growth. The US Fed Reserve trimmed the benchmark interest rate by 25 bips to 4.5 to 4.75% in the recent Fed meet. However, markets seemed disappointed by Chairman Jerome Powell's tone, which suggested uncertainty about the future path of interest rate cuts. Much will depend on how growth and inflation dynamics unfold from this point and the impact of Donald Trump's presidency on these factors. Technically, the 24,000 level is expected to serve as a strong support for the index, and the market should consolidate around these levels going forward. If it holds above this level, Nifty bulls may still have an opportunity to regain momentum. However, a break below 24,000 could further weaken the market. An important update on one of our recommended multi-bagger stock, Anthony Waste Handling Cell Limited, reported operationally weak set of numbers with decline in revenues and fall in profits. This was mainly on the account of higher expenses, higher depreciation and higher interest cost. Considering the uncertainty in the revenues, we have decided to exit the stock tomorrow morning. We had recommended to buy the stock at around rupees 510. The current price as per Friday's closing is 791. We are up by 55% since recommendation. It's better to take money home as we saw a lot of parameters getting unchecked with the latest result eliminating our thesis support. So please exit if you hold the stock. In summary, while the current environment suggests caution view, this downturn can be an opportunity for churning investment but not buying, as now we have Q2 results and trajectory in hand. With benchmark index like Nifty testing critical support levels, the potential for rebound remains. Long term investors can leverage this correction to build position in high conviction stocks. That's all for today. Wishing you a profitable trading week ahead. Thank you.